Lighting up the energy and infrastructure debate. The moderator for the next panel is David Johnston. I don't know if you know this. Apart from being one of the proper OGs investing in this field, what you might not know is that in 2013 he wrote a book where the phrase DAP was coined. Please welcome David Johnston to the stage.
Hey guys, it's great to be here for another year at CfC. I'm excited to bring up our panel. Why don't you guys come on up? We have some of the top thinkers in the space, folks running the public companies and doing mining at scale, really a real depth of experience and expertise. So always enjoy doing this panel. Why don't we kick off with introductions, if you'd like to set us off?
Sure. Kerri Langlais, I'm the Chief Strategy Officer of TeraWulf, which is a public sustainable Bitcoin miner. We're vertically integrated, and so we own our sites.
Awesome. Bill?
I'm Bill Ty, a venture capitalist that stumbled into Bitcoin around 2010, ended up paying for the ASIC that became Bitfury and funded a bunch of other things in crypto.
Awesome.
Fred Thiel, Chairman and CEO of Marathon Digital Holdings. We're a large Bitcoin miner in the US, mining predominantly behind the meter at renewable energy sites.
My name's Jemma Green. I'm a co-founder and chairman of Powerledger. We are a software company. We make software for trading and tracking renewable energy. We have about 20 clients in 12 countries, and we have our own token, the Power token, which is an access token to access our software platform. And we also have our own private consortium chain, which is based on Solana.
Awesome. Well, what I really want to get into in this session is it's amazing to think it's been almost 1 year since the war started, right? And that's actually started right after this conference last year, right? And so energy markets have changed radically since our last conversation. And so I think, you know, beyond the role that Bitcoin and proof of work can play in subsidizing more renewables and that huge transition going on, there's been a whole new conversation around grid stability and things like that. So Fred, I'd love to kick off with you if you want to get in depth. I think people here could really appreciate an understanding of the role it's playing now.
Sure. So as you look at energy grids, Europe is in a different situation than the US. Europe shut down their base load coal and nuclear in favor of renewable wind, believing that they were going to have this infinite amount of gas to run in the interim period. And obviously when this whole war started, that became a problem. In the US, it's a different model. You have about 14% excess energy generation to consumption. And people don't consume energy at the same time every day. Its peak consumption is 4 p.m. to 9 p.m. universally, kind of. That's when people come home, they do their washing, they do their cooking, they turn on the heat or their air conditioning. And so that's, the whole grid is designed to support that peak load. And if you think about the grid, it's like a cake. It's layers of energy types. You have nuclear on the bottom. Why is it at the bottom? Well, you can't really turn up and down nuclear energy. You have to kind of just run it. Then you have coal energy that runs above that. Then you have natural gas, which you can move up and down a little bit. And then you have interruptible energy, which is renewables, solar and wind. The problem is that you have to run the nuclear all the time. You have to run the coal all the time. You use the natural gas for small peaks. And then what do you do with this renewable energy? It's the last energy to get turned on and the first to get turned off by the grid. So how do you create an economically viable marketplace and world where people want to invest in renewable energy, because we all want that for the planet, but it's the last energy to get turned on, and so it's the last one to get paid, if you would. Bitcoin miners consume a lot of energy, and one of the good things about that is we can consume excess energy that's not being used by other people. And so by co-locating Bitcoin miners at renewable energy sites, you can suck up this excess energy that's being produced, and when the grid needs it, you can give it up. So it's kind of like demand response, and instead of doing with thousands of homes where the utility goes in and shuts off your washing machine and turns down your heat and does other things, they simply go to one customer and they say, we need X numbers of megawatts for 90 minutes. We can shut down our systems in 30 minutes or less and then bring them right back up within 30 minutes when the energy crunch is over. And we've acted like a capacitor for the grid. So kind of what David was getting at is Bitcoin miners can provide this buffer customer where we can soak up the excess energy from the renewable providers that helps make them profitable, allows them to charge lower prices to the grid when they do sell energy. But also we act as an incentive for them to build more. Because if you're going to build power generation, you have to have transmission lines to connect it to the consumer. And the transmission line owners won't build it until you've built your power generator. And you can't finance your power generator unless you have a customer, and you can't have a customer if you don't have transmission lines. So by having a Bitcoin miner who can build at the site, they don't need transmission lines. So now you have a reason and a way for more renewable energy to get financed, and the marginal cost of renewable energy is very low, next to zero. So it's a very attractive model, and I think we're going to see more and more energy companies partnering with Bitcoin miners as a way to provide this buffer.
No, I think that's beautifully articulated. And I wanted to go into what TeraWulf is doing with nuclear, because it seems like nuclear is really having a renaissance, right? Where people are realizing, of course, we have to get rid of coal, but what's the base energy going to be, you know, beyond the variable sources that we love from wind and solar? So I'd love to get your take on the nuclear side.
Yeah, just sort of leveraging off Fred's comments, you know, Bitcoin miners are truly a resource to the grid, right? I think one of the misconceptions that people have is you get a miner, you plug it in, it's going to run 95 or 98% of the time because a miner doesn't care where it is or what time it is. And the reality is that's just not true, because, you know, I would imagine this year the average capacity factor for Bitcoin mining or mining load is probably closer to 65% of the time. And why is that? It's because it doesn't make sense to run 100% of the time. Yeah, you know, there are times, take for example, Storm Elliott that happened just before Christmas. We saw the global hash rate actually drop to 155. Why? Because all of the Bitcoin miners actually came off because we're in a period of intense power prices because of weather extremes. And so all the miners turned off. And so what that enables is facilities, you know, baseload power facilities like nuclear, to, instead of relying on government subsidies to sort of cover their fixed costs, to use local load like Bitcoin miners that can sort of be available to run when they're not needed to run and sell power to the grid. And so we kind of become this backstop that enables the power plant to be economic, and also to enable the Bitcoin miner itself to attract the lowest cost of power. And as Fred said, you know, nuclear is the lowest form of a cost of power available, and it's carbon free. So it's sort of a win-win.
Exactly. Well, and the perfect transition to what Powerledger does is effectively prove, right, the power that was used in order to produce the coins. And I think that's sort of a brilliant take on, you know, showing that this is a huge net benefit, right, to that transition.
Yeah, I mean, tracking the provenance of energy, particularly where claims are being made about, you know, green energy or you know, certain amounts of carbon, you know, intensity in the production of, you know, Bitcoin or any other product, you know, that is becoming like an increasing area of concern as like companies and countries set net zero targets, and companies have like 100% renewable energy targets. So they need a way to track every kilowatt hour in terms of type, time and place. And what we do is we, from the generation asset, to measure output and match that against consumption or load profile, and create a record on the blockchain so that you can reliably, legally you know, make claims about the kind of provenance of the energy. I think that's going to become more important as media gives spotlight to greenwash, which is where, you know, people are making claims that are not true. So I think the blockchain provides a good base level use case for tracking energy, but I think tokenization of attribute certificates like carbon credits and renewable energy certificates is another very good use case as well for blockchain, like in the electricity business, so that you're not duplicating certificates or selling them multiple times, or if it's been retired, selling it. So I think that's another interesting area. But I'd say in Europe, what's going on on top of the kind of crisis, there's a reform piece regulation-wise called the Clean Energy Package, which is creating what's called local energy communities. Schools or community groups can set up and actually become an energy supplier, and they no longer have to use a retailer, which is very I think, game-changing in terms of electricity supply. And what it, like to Fred's point around co-location, it's creating price signals which encourage co-location of renewable energy near to where it's consumed. And within those communities, they pay less for the network. So if it's actually within 2 kilometres, in some countries, there's no network fee, or it could be 40% less within 5 kilometres, depending on the country. So I think we're now starting to see this new paradigm of everyone supplies everyone. And again, you need a tracking system to be able to do that, to price different energy from different places and different distances. And what we're doing is making solutions for energy suppliers in France, Spain, Austria, to be able to create these new local energy markets.
That's great. Well, we were talking backstage, Bill, it's really analogous to what's happened before in other industries.
Yeah, so, one way to think about what's happening with energy in general, it wasn't that long ago that you thought about the monopoly phone company and the monopoly power company as kind of the same. And obviously, telecom went through a gigantic restructuring around circuit switch to packet switch technology, where at a granular peer-to-peer level, you could identify the packets that were going into the system, where they'd come in, where they'd go out. And so what's happening now to power is exactly the same thing. You have now abundance of local distributed generation points and consumption points that need to be able to talk to each other in the same way that anybody on an email client can talk to anybody else on an email client, and the system becomes more peer-to-peer. So that's basically what Powerledger does. It basically allows you to see the flow of electrons in the energy grid in the same way that telecom packets were handled, with like a header, a footer, where they go, so you could have different billing systems and account for things properly. And I think the pressure that the miners provide is fascinating, because I can remember in 2011, I was mining at 24 cents a kilowatt hour. And it worked. It was totally fine, because there was nobody else mining. But I think, and a big data center in that era for Bitfury, a massive data center at that time, was 40 megawatts in Republic of Georgia on a hydro dam. And today, I don't know what you guys look for when you go look for a site, but it seems that most of the miners now will not even consider a place unless they can get 100 megawatts, get to 100 megawatts with upside to 2?
It's changing. It's definitely changing. Our biggest site is 280 megawatts.
Okay, but it's up.
Single site.
But you need big.
But we're starting now to look at 30 megawatts.
Interesting.
And 40 megawatts, because we're moving away from these large data centers that are directly at a hub and spoke utility, if you would, power generator. We believe that more power generation is going to happen at the edge over time.
Yeah, more peer-to-peer.
So we're creating smaller scale data center technology, so we can build Bitcoin mining sites at edge utilities, and where you have like biofuel sites. So you can go to a biofuel site, you're generating electricity because of the methane capture, and you convert that to electricity, you mine Bitcoin, you're not even connected to the grid.
But I think all of these things, because of the demand, let's talk about the other end of the scale. There's most of the green energy production marginal cost of electricity got lower than fossil fuel about 2018. Mm-hmm. And that's accelerated now because of the crisis in natural, kind of fossil fuel. So, but people need a reason to put the money up. And if you're going to do like hydro, for example, once you've got a turbine spinning under a waterfall, I don't know what the marginal cost is, probably $0.015, something like that.
Yeah.
So it's super cheap, but I don't know what a dam costs, but it's going to be many billions of dollars. Yeah. So unless you have a Bitcoin miner willing to take 100 megawatts, there's no reason to build the dam. So I think there is this kind of artificial thinking, Bitcoin miners are polluting the world. What they're actually doing is they're driving the kinds of energy production that can get to 1.5 to 3 cents a kilowatt hour, where you have to be now to be competitive, probably like 3 cents.
Mm-hmm. Yeah. So if you actually think about it, the grid is completely flipped, right? It used to be that the generation resources followed where their load was. So they'd be outside major cities, they'd be gas plants that could be turned on in 20 minutes and turned down. Now with the onslaught of renewables, it's completely flipped the equation such that now the load needs to follow the supply. And so, location is everything when it comes to Bitcoin mining. You need to find a location that has sustainable resources. You need to find a location that has scale and that also has an imbalance, right, where there's an excess amount of supply over the demand in that region. And so, and layer on top of that, the energy market, right? So you want to find places where there's not a tremendous amount of thermal in the area because, as we've seen this year in gas prices, there's a tremendous amount of volatility that needs to be absorbed by the miners. So all those things sort of factor into the location equation for where's the best sited. But it's exactly that, finding places, we have a site in upstate New York that's 20 miles from Niagara Hydro. It literally crosses our front door every day, and most of those electrons go to waste. They're not used, right, because there's no demand on that area. So now we have a Bitcoin mining facility that is using those electrons when they're not needed during the 4 to 9 p.m. hour, converting them into something that is a store of value. So what you had was a local commodity that could only travel so far. It's now converted into a coin that has value and can be traded globally.
Yeah,
It's a great comment. I mean, when you talk about energy not being used, curtailment is a massive problem. Like in Germany alone, they're spending $500 million trying to address curtailment by $500 million a year, so $500 million a year trying to address curtailment, which is a fancy word for throwing energy away. And, curtailment can get anywhere in Europe 7 to 10%. And I know in some US states, it's,
20%.
worse. Yeah, and so, Bitcoin mining is maligned. However, what it can do is underpin new projects, as Bill said, but also deal with, curtailment and put that energy to use, which provides a return and actually facilitates and hastens the energy transition. And that co-location piece, I think, is really important as well, because a lot of renewable energy projects up until now have been built far away from where the consumers are. And like lots of people will talk about Germany as being this amazing success story because it's got 53% renewable energy. But the fact is that they did it through centralised planning and put all the generation assets in the north of Germany when the people are in the south. And so they built very expensive transmission lines to bring the electricity to market. And so they have the highest electricity costs in the world. And second after that is Denmark. But when you start to create price signals to co-locate the generation near to the consumption and have supplementary use cases like mining activities, you can really drive efficiencies to hit like higher percentages of renewables without pushing up electricity prices like that you've seen in a lot of these countries.
And in New York State, for example, you have a challenge, which is power generated in the north, power consumption is in the south, all your renewable energy other than hydro is on the east coast. There's no east-west transmission line. So you have all this wind energy being produced and you can't get it to New York City because there isn't transmission capacity. You can only send electrons about 1,000 kilometers before they lose all their value. So it's not like you can transmit electricity from one part of the world to another, other than via Bitcoin.
You can't store it economically either, right?
Yeah.
Well, and speaking of New York, if one were to read the news headlines, Bitcoin has been banned in New York, as far as we've heard. And so I was hoping you could unwind that a little bit for us.
Yeah,
What's the real
that's
story?
typically the first question I receive when I say that we've got a site in upstate New York and a site in Pennsylvania, and they say, New York, oh my gosh, like that must be terrible, I'm sorry. And the reality is that, you have to read the fine print of the moratorium. It's really intended to prevent people from setting up mining operations to keep what should otherwise be a retired thermal facility. So it's for mining facilities that are directly connected to a gas or a coal plant. Our focus has been to be sustainable because we think that Bitcoin mining can be sustainable. And so we are, as I mentioned earlier, leveraging hydro from Niagara Hydro, which is close by, and not relying on thermal. So it's for new people that want to set up shop at a plant that's on its last legs and maybe give it a couple more years, run it to until the wheels fall off and generate some Bitcoin. That's what it's intended to prevent.
Got it. So you guys are effectively unaffected.
We're unaffected, yeah. Thanks.
That's always helpful.
Yeah, I want to go back to what Jemma was talking about kind of the decentralization that's occurring, because if you think about what happened with the phone companies, The USA was a little bit different than other markets, but there used to be just one phone company, AT&T, and then there was a Deregulation Act passed in 1996 that created regional bell operating companies, the RBOCs, if you remember that term. And then with that, a bunch of things called competitive local exchange carriers, so CLECs. And so with that, you had a decentralization of effectively what would be the transmission lines in the power industry. And so when Fred is out there trying to drive a 30 megawatt biofuel thing, it's almost like you've got a circulatory system. You've got blood vessels growing, you have the main trunks going down your legs, but as you exercise, you get all the little veins, you know? And so I think what's happening now, even without the Telecom Deregulation Act, is the pressures from mining and the cost of fossil fuel is causing all these little generation things to pop up, and the interconnection points are now starting to happen in the same way that the CLECs connected or became the backbone for the ISPs. So I think you're going to have a fuller peer-to-peer fabric that allows great resiliency and very liquid flow of costs.
Yep.
And then the Bitcoin miners we were talking about last night, they become a little bit of a load balancer.
Yep.
So they act like capacitors or batteries on the system, where the excess gets absorbed, gets turned into something else that can be paid, used to pay for. You can describe the capacitor analogy if it makes sense.
Yeah, I mean, a capacitor is essentially you load up a bunch of energy, and then when you need to discharge that energy quickly, you can do it, and then the capacitor has to reload itself over time. So capacitors exist in every single piece of electronics we have as a way to manage fluctuations in electricity. One of the things I think that's very interesting as you look at this generation at the edge, it's not dissimilar to how the internet is being redesigned for AI processing. If you were to have all these centralized systems where you collect data at the edge and then you have to ship it up to centralized servers where it's analyzed and then shipped back down to the edge where it says, okay, turn the car 2 degrees to the right, be very inefficient, very expensive, all this transmission, and huge room for errors. That's like the energy grid, only in reverse. Power is generated centrally and sent out to the edge. And if you instead can generate electricity at the edge, you have a lot more redundancy. You can leverage renewables, battery technology, because it's sub-utility scale. And you can do it at a community level, and now communities become self-sufficient. And they can essentially trade the energy using Jemma's platform. And it's a much more resilient model. And I think what we're going to see is this creation of these smaller markets. We're going to see more energy deregulation in the States over time, especially in certain states in the middle of the country. And you're going to see a lot more renewable energy come to work. Plus, I think, on the nuclear side, the energy crisis we're in today has all of a sudden opened people's eyes again to the fact that, nuclear isn't that bad. And so we're going to start seeing SMRs, small modular nuclear reactors, which are 30 to 50 megawatts, essentially assembly line built nuclear reactors. And if you look at the US Navy, you don't hear a lot about Navy ships having nuclear reactor leaks. These are all small nuclear reactors. But essentially doing these on a fabrication line as opposed to one-off designs, that makes it much more resilient, much better. Most importantly, SMRs use the spent fuel from normal nuclear reactors and reburn it. And so now you take care of all that nuclear waste issue. And so this is, I think, what we're going to start seeing, this advent of SMRs, and then eventually in 20 years, fusion reactors. But
I think the other great thing is, as Bitcoin miners operate as a resource to the grid in terms of grid balancing, they're getting paid for it, right? So the grid sees the value that we're providing and is paying us in forms of demand response programs, even serving as a capacity resource. In upstate New York, we're participant to 3 different programs. 2 of them are demand response, and the last is for capacity. We basically are. They treat us almost as if we're a power plant that has 100 megawatts of capacity that can come on and off as quickly as a couple of minutes. And so, as I mentioned earlier, with Bitcoin mining operating 65% of the time on average, you really need to have an alternative revenue stream to sort of drive returns. And so as we manage our business, the way that we think is if in the next year, 30% of our revenues are coming from not Bitcoin mining, then we're doing something wrong.
Yeah, I mean, if you don't have that,
Right.
if you don't have the Bitcoin miners, then you're going to need that flexibility to come from somewhere else. And if it doesn't exist in the system, then you're going to need to build gas or expensive batteries, and all of that capital expenditure is going to add to the electricity costs. So you're actually driving efficiencies through providing like flexible loads that doesn't require capital expenditure that's being added to the cost stack of electricity generation.
Yeah, and I just want to dive a little further into curtailment, because that's sort of a word we've used here. We've touched briefly on what it is, but I think it's worth explaining very briefly. Let's say you have a large wind farm where there's 100 megawatts of capacity. But of course, the wind blows and sometimes it doesn't blow. Well, when the wind's blowing hard, sometimes the grid will say, hey, we have too much power. We can't store this power.
It's going to
Please
spark.
turn it off.
Yeah.
Yes.
Right?
gonna
And you look at
blow.
markets like Oklahoma, you can have that 30% of the time.
Yes.
They're telling wind power, don't turn it on. Right? And like you said, that leads to less money to the renewable company, building less wind farms because you have this curtailment issue. And if you look at batteries, there's, let's say, 2 cents a kilowatt, 3 cents a kilowatt if you build a wind farm. If you wanted to store it all, batteries are still pushing that to 20 cents
Yes.
a kilowatt. So without some sort of battery solution or an implied battery, you're not going to be able to solve this problem and transition as quickly to renewables.
Correct. And so I think you're seeing a couple of things that are going to impact the energy grid much more broadly than just the crisis we're seeing now. The adoption of electric vehicles is going to require charging stations and infrastructure. Semis, or lorries as you call them in Europe, the typical charging station for electric lorries requires 30 to 50 megawatts of power. That's a small Bitcoin mining site. Now imagine having these all over the place where they don't exist today. How are you going to get the energy to them? How are you going to generate it? How are you going to have this capacitor factor? And so there's some very interesting concepts being floated now about co-locating Bitcoin miners and these superchargers. Because if the trucks aren't coming in, you got to do something with that energy. Right? And so you can do Bitcoin mining. So what I think we're going to start seeing is Bitcoin mining move from these big centralized utilities out into these vertical little applications, which will spread mining and change the nature of the business in a very positive way, because we're essentially establishing big support for the energy grid.
You know, I want to chime in just to say about the change, because I think, you know, power, generally speaking, is like one of those boring things in the world to most people. But I just have to say that from an investment opportunity, it's really fascinating right now, because, you know, when you make money in big multiples, it's because you found a gigantic market that's going through structural change. We have that here. And there's an information asymmetry.
Yes.
And this is an area that no one cares about, but it's like the most important thing ever. You know, and I've said this before too, but if you thought about what's more important to you, the electrons that you use every day in this, or your fuel, like gas fuel, if you had to give up one, you're going to give up the gas, because all marginal productivity today comes from electrons. And it's one of the biggest markets in dollar terms in the world. And it is getting remade. And it's a little bit like in the 90s, venture people didn't understand how to invest in telephone stuff, because it was, regulated, it's
Government.
slow, dealing with phone companies is awful. And Jemma goes through that every day, dealing with power companies. But this whole market in the next 10 years is going to get remade. And it's going to go from centralized to some form of modified peer-to-peer, decentralized. And there's going to be 100 things to invest in. So just, you know, it's exciting. Just remember that.
Well, it's funny you mentioned the phone, right? Because we're all walking around with basically computers in our pockets every day, all day. And so the smart grid is not far, right? It's not far. And so to enable sort of these smaller decentralized areas where Bitcoin mining is leveraged can be turned on and off by some sort of a central administrator. I mean, that's in the foreseeable future, right?
Very close.
And so,
Yes.
yeah.
And that, by the way, is
That's
a
what she
software
does.
marketplace
Right, exactly.
waiting to happen, is essentially demand response through a bidding marketplace.
Well, it's, you know, in the fall, when California, which is going through a lot of environmental stress right now, is going through their blackouts, the governor tweeted and said, hey, there's a risk of a blackout. If everybody could just be mindful and sort of turn things down, and the load dropped instantly. Now, I don't think that's replicable, because the next time he tweets, someone's going to assume that someone else is going to turn their power off or turn their AC off, and they're probably not going to do it. But it just shows that if there's a centralized decision, a lot of these things can be affected very quickly.
Well, plus, in California, something that wasn't noted very publicly was that 40,000 homes that have Tesla Powerwalls are part of a program with the state for demand response. And so the state was actually able to draw energy from the power walls, put it back in the grid, and then pay it back.
Right.
And so this is, again, back to this power generation, solar, homes, battery walls. Now you are a community grid. You can feed to your partner, your neighbors, et cetera.
Yep.
You can also feed it back to the grid. This is going to be a really interesting area where this marketplace, where consumers are going to get paid for essentially putting solar on their roofs, wind in the right environments, geothermal in the right environments. And they're going to become utilities, small utilities.
I mean, in the UK, the energy crisis there, the National Grid asked for people to sign up to participate in demand response, and they thought that maybe 30,000 people would sign up, but 1 million people signed up to participate. And it flew in the face of the kind of idea that people are disengaged from energy, because I think that has historically been the case. But through the emergence of people investing in solar and batteries and EVs, now citizens have become like citizen, bloggers or journalists. They've become citizen utilities and citizen power stations. And virtual power plants are the kind of first iteration of their participation in the electricity market, which is them dispatching power in the wholesale electricity market to make money and pay back their investment in their battery faster. But I think the next layer of that is actually through the emergence of local energy markets where, say, we're all living on the same street and some of us have batteries and some of us have solar and are exporting more than they need. Others are storing that surplus solar in their battery and providing it at night to deal with that peak period that Fred was talking about earlier. And in doing that, there is less energy being exported at the substation level, which is causing congestion at this point. And so the substation doesn't need to have a $50 million upgrade to be able to cope. And what that means is that through the emergence of these local energy markets, you can have a leaner piece of infrastructure to move the energy around and allow renewable energy to be supplied to people that don't even have solar panels on their roof or don't have a battery.
Yep. And when you look at the cost of maintaining a grid that has to be able to produce peak load, right, for peak demand, if you have battery storage throughout the grid, you now have to only have an average load that you need to support. And so the overall CapEx load for energy in a particular country, county, state, country comes down. It actually will lower the cost that the public has to pay for energy over time.
Absolutely, yeah. I mean, we're doing this in India with Tata Power, a demonstration project to show how they don't need to upgrade the distribution and transmission grid so much by creating these local energy markets. And then also commercial and industrial customers that have power purchase agreements and they might not be using all of their PPA. And so that's basically, they're on a take or pay contract. So regardless of whether they use it, they have to pay for the energy. But using our platform, they're now having a secondary trading market for surplus PPAs. So other customers can buy that surplus PPA as well. So they don't necessarily have to take on the same risk of entering into a PPA, but can access renewable energy. So I think we're going to see lots of new use cases that are emerging in the same way we did in the telco sector. And technology is going to be a big underpinning of that. And citizens will be, as well as commercial and industrial customers as well.
And energy drives prosperity and innovation.
Yes.
And the fact that we can lower our cost to produce energy over time and make energy even that more abundantly available has a huge quality of life factor.
And I want to say I love the framing, Bill, that you gave, which is, 100 years ago, you had a gold standard, and 50 years ago, you entered the petrodollar, and oil was the standard of the world, and we're transitioning to electricity.
The electrodollar.
As that basis of commerce and prosperity, even of currency. And so thinking of Bitcoin as a way to store and transport electricity is a very literal thing. And so I think that makes a huge amount of sense.
Especially when you look at commodity markets, right? So the oil industry, oil is not produced where it's consumed. It's produced in countries, loaded onto tankers, sent to refineries. You can't do that with electricity other than through Bitcoin.
Yep, exactly. Well, and I just want to close with, because we got about 3 minutes here, it may help folks to understand a little more about your business models, especially our Bitcoin miners here, because unlike a gold miner, we have difficulty adjustments and there's a network hash rate. And so it might be useful for people to understand, how are you guys profitable today at this lower price of Bitcoin, and how Bitcoin is unique in that regard?
So you have three uncontrollables for Bitcoin miners. We don't control the global hash rate. And why is that important? Well, in gold mining, you have gold reserves in the ground, and you know you have gold reserves in the ground, and you can always discover more. You decide how much you want to exploit of that at any given time. In the Bitcoin mining world, there are today only 900 Bitcoin minted per day. And so miners are competing for those 900 Bitcoin. In May of next year, that number goes down by half. And this is part of the automatic process that every 4 years, essentially, Bitcoin halves the production. And so we are incentivized to compete against each other for these 900. And when the price of Bitcoin goes up, we all invest in more CapEx to grow. And so we're competing for this market share of this finite zero-sum game of 900 Bitcoin. When the price drops, people become less profitable. They take hash rate off. And so now all of a sudden it gets easier to mine Bitcoin because there are fewer people vying for that. The other thing we don't control is the price of Bitcoin. Price of Bitcoin, though, drives global hash rate. And then lastly, the uncontrollable is the cost of capital. And that's driven by the equity markets. And so we've had this perfect storm in 2022 where energy prices shot through the roof at the same time as Bitcoin prices crashed, at the same time as the equity markets closed. And so Bitcoin miners traditionally would go raise equity, invest in new infrastructure and grow, monetize that with Bitcoin, rinse, wash, repeat, do it again, and continue to grow. Right now, what's happened is companies leveraged up way too much during the growth phase. They're now in trouble because the interest rates on these loans have gotten way too high. Some of the miners are declaring bankruptcy, others are restructuring through other forms. And you're having kind of a cleansing of the market. But if you're a large-scale miner who can control their energy costs, like either TeraWulf or ourselves, then you can control your costs. And if you're a lean enough operator and you're not investing at the wrong part of the cycle, you can essentially benefit from this downturn in the market that we've had. And even though the price of Bitcoin has come down, and you're not as profitable as when Bitcoin was 60,000, you can still be very profitable over time and operate debt-free and essentially, have a very sustainable business over time.
Right, I think it all comes down to power, right? At the core of Bitcoin mining is energy infrastructure. So having control over your power source, understanding the contract, where the risks might be, ensuring that you've got low cost, that's really going to create the resiliency that you have throughout market cycles. I mean, you think about the energy business, we've been through many cycles up and down. And so the way that we think about our mining is based on unit economics, right? Very simply, very similar to the energy industry. And so if you have, a secure source of low cost, ideally renewable power that's fixed and that you can rely on and that is not subject to tremendous volatility, then you can weather the storm.
Perfect. Well, thank you so much to the panel. Appreciate everybody's time. Great discussion.
Thank you.